What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin. Before I get into going over the charts, there's a few fundamental points that I want to speak about. The first one being relative to Charles Schwab, the CEO, saying that they're going to begin offering Bitcoin trading in 2026, even saying that they're having a lot of success in the crypto space. And we're seeing a valuation here of $11.6 trillion, so this is going to be very, very big once this begins to actually unfold next year. Secondly, also lastly, with the Bitcoin ETFs, BlackRock recently coming out and saying it's their top source of revenue. We're talking about $245 million in annual fees generated by IBIT by October 2025. It's also the fastest growing ETF in history. They're now holding 3% of total Bitcoin supply. So, I mean, the fundamental landscape, something I've spoken about various times in recent videos. I mean, really even going back to the Bitcoin spot ETFs whenever they first launched, was a very, very crucial turning point in the adoption and recognition of Bitcoin as the innovative technology, also going out to crypto abroad with actual altcoins that are proper real-world use cases, and even more so with the regulational clarity. If you're aware of what's going on in America with Donald Trump's administration and propelling that forward, even just outside of America, it is just continuing to evolve to get more and more support in various different sectors of the real world and the fundamental landscape. But when we look at the charts, it doesn't particularly seem to square all that well. You would think, at least the first inclination here would be, that with all these fundamental landscape points being as good as they are, continuing to propel forward, that we would be seeing the most mind-melting, parabolic, straight-up bull run that Bitcoin's ever seen. But that has actually been not the case. It's been quite literally the opposite of that, the most stair-stepped, the most gradual and lollygag bull run that Bitcoin has ever had. And it's about 16 years of existence. But here for the 4-hour chart, the first thing I want to go over is a lower time frame horizontal zones of potential resistance, as we've seen Bitcoin locally bottom out around November 21st at around 80.5 thousand. Ever since then, we've seen this gradual climb upwards, hitting this first zone here with the upper bound basically lining up with the 200 EMA right now at around almost $95,000 on the dot. So that's going to be very important to break. Furthermore, above this, we see the zone here from around 101,000 to around 106,000. The 800 EMA here sitting at around 104.8 thousand. It's going to be a very important zone after the first zone here to get above. And the last zone here, it's essentially just the prior all-time highs. But before we actually do get to these prior all-time highs here at around 126.3 thousand, this zone here around 115 to around 118,000 will be quite important. If we look here at the 12-hour chart, we can see that the 50 EMA and its band are being tested. The price is currently sitting right in the 236 to 272 zone of the trend-based Fibonacci extension that I've been updating on this chart. The 382 sits around 101.67 thousand. The 200 EMA sits around 103.7.8 thousand. And we also see the 0.5 here at around 111,000. So this is going to be a very crucial zone here. Approximately 111,000, give or take a couple $1,000s or so. So we're talking around 109, upwards towards around 113 or so $1,000. That zone, which corresponds to this, if I were to make the zone here a little bit bigger, the uppermost zone of horizontal resistance in terms of the potential of that occurring, as if even if we see Bitcoin actually break here, first off here, the 50 EMA, then the 800 EMA, which is around 97, 98,000. Then, as I said here, that 200 EMA at around 104, 105,000. Then afterwards, this zone here, as you can see, it was resistance. And we saw some rough support here until this here zone was lost. And we've seen Bitcoin initiate this rather intense correction going all the way back to the beginning of October, which, typically, historically speaking, would have been a better time than we've experienced, but it has been the opposite of that. Here on the daily, it's going to be very important to see Bitcoin get back above the descending resistance here, which, depending upon when it happens, it's around approximately $96,000. There's this horizontal zone here, where we can see it was resistance for this double top going back to December 2024 to around February 2025. It was support here, then obviously you can see it was lost here. So getting it back above this with the upper bound being at basically $106,000 is going to be very crucial. That would see also as well the price get back above all the EMAs here, most notably the 200 EMA, which sits here on the daily at around $104.5 thousand. Looking here at the 2-day chart, the main thing I want to see on this 2-day chart is to get back above this zone here, which is essentially just lining up with resistance here. Resistance was support, now it's turned back into a rejection of resistance. So getting back above that with the upper bound, $115,000, it's going to be quite crucial. If we look down here at the RSI for the 2-day, we've seen there's these varying, as they get steeper and steeper, these resistances. We've seen this first more shorter term resistance here broken. We've seen the RSI move above the median, the Bollinger Bands, the moving average associated with it. So continuing to see the RSI move up here, especially above the 38.2 zone, as it's sitting right below it, just a tad bit below it, was going to be very important. And then getting back above this resistance here, somewhere around 5760 on the RSI, and then getting above the 61.8 value here will likely, as it typically has in these last, for example, here we can see corresponding with this move here, with the move here, going back even further, we can see here corresponding with this entire move, getting above that 61.8 zone going to be very important, which is roughly corresponsive to the intermediate resistance of the RSI. So if I'd have to imagine, let's say just to entertain here, this is the local bottom, Bitcoin's making a move up here, and it's not going to be a dead cat bounce. Seeing everything I just mentioned with this horizontal zone here being broken towards the upside, then afterwards with the final step clearly and obviously getting back above the prior all-time highs at approximately 126.2 thousand. Going to be very crucial. We've seen a bullish flip on the 2-day MACD. There's a bullish divergence here on the RVI. Seeing an upwards poise, we could potentially be seeing the RVI flip from this lower bounded zone, which is associated with bearish sentiment in the price action, so going down, to flip here towards the upper bound zone, which is going to be correlated with a positive volatility and bullish sentiment towards the upside. If we look here at this weekly chart, this is one of the bigger charts I've gone over in the last videos, or a couple of videos. I don't quite remember when I went over it first, but this is essentially, well, there's a lot on here. We can see there's an ascending resistance here that's been intact since the past bull run peak, going back to early 2021. The SMA pairs, as we can see here, the 12 and the 24, the blue here is the 12, the purple, the 24. You can see each of these crossovers of the blue, the 12 going below the 24 is lining up with these lows. We saw this here recently. That can be paired with the ASO that we see down here, as I have here denoted with these horizontal zones. You can see the bear sentiment gained dominance for a brief period of time, only to flip back into a bullish sentiment, which correlated with, as you can see here, this move, this move, this move here, and extrapolating this forward, assuming the pattern doesn't break, and so far it's looking as if it's going to continue the pattern here rather than breaking the structure, but obviously we still have time to tell that. Then we'll see Bitcoin, at the very least, I think, move back above, or back up to the ascending resistance here, so somewhere, depending upon when it happens. At this point, I think it's probably going to be at earliest February, but closer to March, April, May, sometime within the first half of 2026, so as to update the potential projection for an upcoming all-time high, if that is to be the case, that Bitcoin has more movement towards the upside due to the wrench that was thrown into the system here with this intense decline in price since the beginning of October. This is clearly going to extend the bull run, if indeed there is still a bull run intact here. So seeing this is going to be very important. We can see that the ASO appears to be wanting to wane here. It's starting to flatten out a bit, look as if it wants to coil down, specifically the bear sentiment coiling down, the bullish sentiment coiling up into a bullish cross. We see on the RSI here, it's reached its lowest level since basically the earliest moments of the current bull run, where you can see this support here, here. These varying local low supports as the bull market here has scaled towards the upside, and it's currently more oversold than any of those past instances of support, which we're seeing an intense hidden bullish divergence here. Getting above this descending resistance here is going to be very, very important, I believe, on the weekly chart, because this has been intact since the peak of March 18th back in 2024. We've continued to see here a 2x bearish divergence, but we're also seeing these hidden bullish divergences form at the same time, where essentially what we're seeing here is there's an uptrend structure here on the price, but there's a downtrend structure here on the RSI. So that's more complex than just a simple low to low hidden bullish divergence, or just a a high to high bearish divergence. This is an actual trend based structure where we're seeing consecutive subsequent for example, as I said, we're seeing there's an initial bearish divergence here, then there's a 2x here, and then we could say the same thing for the hidden bullish divergence. So we're seeing an elongated, it's prolonged here in this, but isn't for the price, an uptrend structure that should, I think, at least more likely speaking, although it could totally not end up coming to fruition, flip the price back into movement towards the upside. It looks as if the price wants to be finding some support here. We've seen some pretty drastic wicks here. We're seeing a current candle with a big wick towards the downside and a small body. So we could either, there's two scenarios here. We're seeing the bearish pressure ease up a bit. We might see a dead cat bounce. It might go sideways and then lower. Or this is indeed the current and most recent local low, where we'll see Bitcoin move back up here to the zone here of the 12 to 24 EMA pair. So somewhere around, or rather these are SMAs, somewhere around 106 upwards to 110,000. I would say the highest extent with which we could see the price go in the case of a dead cat bounce would be up here to this zone. So somewhere around just pushing 110,000 at highest, and then breaking this, finding support, best case scenario, and then continuing to move higher would be the best route to take. After that, then obviously it's going to be breaking the ascending resistance that's been intact for multi-year period at this point, or at this point pushing almost 5 years, heading into Q1 and Q2 of 2026. Now the upper bound here does sit at around 140,000, so that would be here going forward a crucial value to look out for towards the upside, assuming we end up actually meeting all these other factors that need to be met. Now, one thing I do want to point out here is look at this MACD. We can see that it's really kind of just forming a megaphone-like structure, which is typically a bullish pattern. Although in my view, I think all patterns should be taken as 50-50 until whatever confirmation happens. Obviously, certain patterns have a higher likelihood of breaking towards the upside and a higher likelihood of breaking towards the downside, whatever their personal characteristics may be of that pattern. But I think best way to look at patterns is to expect them to do either at a 50-50 chance up until the point where a confirmation is confirmed. But then obviously it gets a bit difficult because there could be fake outs and things along those lines. But the MACD here is lower than the past, getting into the end of the past bear run. Here it's actually lower, which is typically kind of the trend of the MACD. It continues, as you can see, here to get lower and lower. But it's just very interesting to see the fact that Bitcoin is, as I've already pointed out, it's above every single local low zone that's been set in their current bull run. We're seeing the RSI insanely oversold, as I already pointed out. The stock RSI is also bottomed out here, flipping bullish currently. The MACD here, again, like I said, is insanely low. It looks as if it could be starting to ease off the downside pressure here, maybe start to eventually coil back upwards over the next few weeks, going into the end of December, if I have to imagine. If we're seeing a genuine reversal here, then I'd have to take an educated guess that, I mean, by January at the earliest, we would see Bitcoin actually finally getting close to retesting this rough all-time high zone right here. So somewhere around 110 upwards towards obviously 120, 125,000 approximately. And then by the time of, at earliest, maybe February, we could potentially be seeing, so it looks something along these lines. So if we're seeing a V-shaped recovery in the making here, then we would see something along these lines where it would really start to break prior all-time highs late January, going into February, then going here into like March, April, May, would then actually potentially begin to hit price targets upwards towards 170, 180, 200,000, maybe 220, 230,000. Now, if we look here at this weekly chart, a very long-term trend we'll see here in blue, we see the end of the first cycle of Bitcoin back in June of 2011, it was resistance. As you can see here, then it flipped into support here. The blue did, going into this first phase of cycle 2 here. Then we end that phase 1 of cycle 2, beginning phase 2 of cycle 2. We saw the bear market bottom here again in the blue zone. The price moves up and straddles this yellow zone here, which I'll get to that here in a moment, breaks it into the parabolic action. And then it's just basically, I mean, we can see here the yellow became support. It was resistance here. Now the yellow here recently, as we entered into the last bear runs accumulation zone, turned back into resistance. As we can see here, it's been resistance for each of these recent peaks of the current bull run. And the blue zone has held up as support since the intermediate correction of the bull run of phase 1 of cycle 2 back in late June, early July of 2013, after it was initial resistance for the end of the first cycle of Bitcoin. So we're seeing the price currently in the upper bound of the support zone. The lower bound sits at approximately 70,000. If we see weekly candles close below, as I've already pointed out plenty of times, just around 78, 80,000, 75,000 at the lowest, just anywhere, and honestly, if it even closes in that zone, I just don't think that's a good thing. I think it's very, very, very pivotal that Bitcoin finds a local low support where it has currently hit its lowest values. So again, if we see here, imagine that this ascending resistance here that goes back for 14, 15 years or so, comes into play again sometime around March, April or so next year, then we would see Bitcoin hitting anywhere from around 190 upwards towards 240,000. We are also seeing RSI candles printed here, oversized RSI candles. These typically don't print until towards the end of bear runs, as we see here, here. We also saw it in the March crash, which I think is actually the most comparable moment, because clearly, I mean, if we actually go to the beginning of the most recent, you can see here that none of these oversold RSI candles are printed until, the bear run really began and was really solidified with this really drastic drop here. The same could be said going back to 2017 to 2019 here. You can see the bear run was already on its way, well on its way here, but it didn't start to print these highly oversold RSI candles until, obviously, so this is just a logical inference of technical analysis, until towards the end of the bear run. Same thing could be said here. So I think this is, as I said, what we're seeing here with, Bitcoin still above every prior local horizontal support. Yet we're seeing these oversold RSI candles printed. So again, like I said, I think it's most comparable to March of 2020, and we can all see what happened after March of 2020. I don't think it's going to be that parabolic. I don't think it'll be that intense, but I do think we will be heading into the most intense move towards the upside in just one run, about somewhere probably around 150% at least. Each of these past moves, this one here was 100%, this one here was 200%. This one here was 100%, but in total, this entire move here would be, pushing 300, 400%. So it would be the most violent move of the current bull run if we do still, again, take the structure where we see this is the first move, we see a correction, second move, second correction, and this here is, in total, this move here is the last and final move, but it's just being prolonged and elongated for various reasons. Who knows? It could be manipulation. It could not be manipulation. It could be, again, as I mentioned, Charles Schwab earlier. I mean, you got to think about the institutional interest, BlackRock, Vanguard, growing nation state adoption and interest. I mean, there could be a lot of manipulation going on here for these bigger players, the big money, smart money, to manipulate the price lower through whatever means they may choose, just so they can get in, for example, sub and below $100,000 before things are taken up to $150,000, $200,000 and higher going into the first half, or just 2026 in general. If we look here at this 2-week chart, again, I've gone over this plenty of times. It's just the accumulation distribution of the open interest money flow index hasn't printed its all-time high, signaling yet it's happened and has worked since May of 2011, the end of Bitcoin's first cycle. Here we see another all-time high signal that goes all the way back to the end of the first cycle. Bitcoin hasn't been printed yet. None of the coin glass indicators are printed yet, obviously. Here's a new chart, the monthly. We can see down here at the bottom indicators the Bitcoin energy, and each of these zones that we can see here in purple denoting these bear market lows here, we can see that Bitcoin has been in this form of this state of environment since the local low set back in February 2025. As especially on the monthly, looking at it, I mean, Bitcoin's, there's a slight upwards poised structure here, but it's, it's kind of basically going sideways. And so we're seeing this kind of consolidation range at all-time highs, and we're seeing this Bitcoin energy indicator here printing data that has, as you can clearly see here, historically going all the way back to September 2011, lined up with the bottom of bear markets, or at least, again, we see the March crash here. It happened as well back in 2020. And like I said on the weekly chart, I think this is what is most comparable to it, because I think we aren't, if I, speaking in a most likely sense, who knows what's going to happen, but everything considered, fundamentally speaking, technically speaking, it doesn't seem like the bull run is over for various reasons that I've gone over in this video, that I've gone over in past videos. And it just more so seems like something that's going on in the fundamental landscape that is causing the price to lollygag, to be very ambiguous too. I mean, a lot of people really aren't sure. I mean, is it going to go up? Is it going to go down? I mean, with how this current bull run has looked, with this stair-stepping price action, maybe we're just getting stair-stepping in a sideways range again before it goes back towards the upside. But at the same time, the whole 4-year cycle thing is basically already elapsed, and you got that idea on the table, and people are saying, oh, it's over because of that. But my personal view is that we're going to see that extended. I think it's very clear that as Bitcoin has aged and progressed to maturity over time, that it takes longer to perform and execute bull runs, and the same can be said for bear runs, and I think that will continue to be the trend going forward. I think we'll see every bull run get longer and longer, every bear run get longer and longer, which means they'll become more brutal in the sense that they're going to be more lollygagged, and they're going to be more staircasing rather than these intense one-and-done pumps like back in 2020 to 2021, or even going back to 2016 and 2017. And here for this monthly chart, what we'll see here is again the 12 and the 24, blue, purple, and then there's also the 21, which is this kind of reddish, maroonish color, magenta almost. And so, as I went over in the last video, every time we see the 12 here go below the 24, so that's the blue below the purple, you can see here the lowest set for the bear market, lowest set for the bear market. Same thing can be said here for the most recent bear market, but it continued to dip a little bit afterwards. And so I added another one here, the 21 SMA. Again, that's going to be the reddish SMA, and you can see here that when the 21 went below the 24 here, it lined up with the end of the bear run of 2015. It doesn't necessarily apply to 2018, 2019 here, but if we do look here at 2022, you can see the 21 going below the 24 here lined up actually with the absolute low of this most recent bear market. So I will take it an assumption, I mean a reasonable assumption is going forward, that in the upcoming bear run, as we see Bitcoin get closer and closer to that low, we'll, initially we'll see here the 12 below the 21 and 24, and then once you see the 21 go below the 24, the bottom is basically, and it might go down and dip a little bit more because of what I mentioned earlier with the prolonging of the cycles and them getting longer. That's why, as you can see here over time, like the crossovers didn't even happen back here in 2011. They began to happen here 2014-15. It happened to the same degree basically in 2018 to 2019. Then we started to see a change in the most recent bear market going into late 2022, early 2023, where I will continue to over time have to add different SMAs because of the way in which the personality of Bitcoin's price behavior is changing over time due to this extension aspect of the bull runs and bear runs. And then lastly, obviously, just to point this out, we can see that Bitcoin is still have yet to hit the all-time Fibonacci zone that is, as you can see here, always lined up with all-time highs going back to the first bear market here that could be reasonably taken as a Fibonacci extension. And so again, that lines up with approximately $210,000, give or take, maybe $10,000, $20,000 or so. And then lastly, I just want to point out here that we are potentially seeing the 786 to 854 hold up as a horizontal support zone. We could see the 20 1 and 24 SMA act as support here on the monthly to see a further bounce towards the upside to continue the bull run. Now here, lastly, with the yearly chart, I want to point out again, I go over this chart in almost every single video just to kind of put it out there as the most macro sense of analysis. There's still good reason, obviously, to think that there hasn't been an all-time high actually set yet, the absolute all-time high that is. And we can see here that there was 4 years of a bull run here, then it was 3, and then 3, and 3, and then as you can see here, we're on currently the 3rd year. Now, let's say Bitcoin has topped out yet. This means that we'll see the 3 years continue to follow through as it has since 2015. Although at this point, it looks as if 2026 will be the all-time high year. We'll see this kind of stagnant, this ambiguous decision-making candle here where we can see small-bodied wicks towards the upside of the downside. Then we'll see the 2026 candle here move up to the zone here. So somewhere this ascending resistance zone on the yearly is somewhere from around 216 to around $330,000, which I don't think it'll go that high, but who knows, it might. And so we could potentially be seeing again, like I said, this, you might be wondering, there's 4 years here and then it started to decrease. So how is that lining up with the whole idea of what I mentioned with the extension of the bull runs and bear runs? And this could be deduced down and elucidated due to the fact that this was here in the earliest stages of Bitcoin, when it was in its state of it had more youthfulness, had more vitality and vigor, so it wasn't having to cool down as much. So that's why I would say here we see 4 candles and now it's turned into 3, and then it could very well be turning back into 4. Maybe it'll be 5 at some point, maybe it'll be 6, who knows what's going to happen. It might not end up being as linear as that, it might be quite random over the longer term, going 10, 20 plus years into the future. But obviously only time will tell with that. But that was all that I wanted to go over in this video. So again, as always, none of this is meant to be financial advice, but all of that being said and everything else gone over, I hope you all enjoyed and I hope you all have a wonderful day.